Glucon-D, Complan, sugar-free. I'm pretty sure you must have heard these names. Well, not only you but each and every Indian must have heard at least one of the three names. Well, today we are going to discuss about a stock who manufactures these products, and this is a FMCG stock. And you know that FMCG stocks are actually evergreen stocks. They are not seasonal, they do not have seasonality effect, although their share prices are affected by market sentiments, but you cannot compare them with seasonality. Okay, like let's say IT sector or any chemical sector, you cannot compare it with them. So what is the name of the stock? This is Zydus Wellness. So today we are going to do a complete analysis on the stock fundamentals and price action, and then we'll arrive at a conclusion if this is a good stock to invest in or not. But please remember that this is not a stock recommendation video. This is just an educational video to help you make better investments, right? So with that said, let me take you to the screen. Alright, hello everyone and welcome back to another video of Financial Impulse. Okay, so this is Zydus Wellness, and you can read here that it actually manufactures these products, the names that I mentioned earlier. Okay, these are the names, and not only that, they also manufacture a lot of other products. I'm pretty sure you must have heard those names also. What are those names? You have to do little bit of research yourself, because it's not possible to discuss each and every point and every name in this video. Okay, so let us go to the valuation, the numbers of the stock. So the stock price is 2077, market cap 13,216, reserves is 5,600 crore, and debt is 188 crore. So debt to equity ratio is very good at 0.03. Sales growth is decent at 10.47, but 3 years average profit and earning per share is low. Why did this happen? We are going to take a look at that in some moment. Okay. Interest coverage ratio of 30 is good. Current ratio 1.5 almost is good. Operating profit margin, we have to check how this has been for the last few years. Okay, and industry P is 68.54, but stock P is 38.76. So it's an undervalued stock. So if you are someone who hunts for undervalued stock, then this is one of the stocks which you should consider. Okay, now talking about the profit and loss. Okay, so let me scroll down a little bit. So if we check last 4 years data, then we can see that the sales growth for the last 3 years, I mean apart from 2025, has not been that much. 2009 crore to 2255, then 2003 28, but in 2025 it jumped a lot. Okay, from 2328 to 2709. Now operating profit 345, 337, then 308. So here we can see it dropping despite the increase in sales we just saw here. Why did that happen? Because the operating profit margin has been dropping by 2% every year, 17% to 15, then 13. But in the last 1 year we can see increase in operating profit margin, and same here, increase in operating profit, and also there is increase in sales. So that's why all of this is making the stock look stronger for the last 1 year. Okay, now coming to the shareholding pattern. So if we check last 3 quarters data, we can see that the promoters have almost kept their stake constant at 69.62. It was for the last 2 years, then this year it is 69.64, slight increase. And if you compare it with 2022, you can see there has been little bit increase. Here it was 65.14, now it is 69.62, so almost more than 5%, 4.5% around increase. Okay, now FI is holding 3.36, 3.37, almost the same, 3.29, slight drop but very negligible, 0.08% drop, so almost negligible, that is acceptable. DI is holding 20.37, 20.12, and here 19.76. Here also there has been around 0.4% drop. Okay, that is also fine. No major drop like 5%, 7% drop in FIs or DI. So overall the fundamentals of the stock and the overall shareholding pattern, the business is looking strong. Now coming to the stock price. Okay, so in the stock price we can see that the stock went to a bottom of around 1500 in March 2025. Now it has gone up by 35% in last 3 months. Now why is the current time very crucial? So for few reasons. First of all, we can see that here there was a resistance level. I have already drawn that around 2000 and it broke above that. Okay, although today the break is not looking very strong because you can see a big wick here, but we have to wait for the day close. But still we should keep this level in our radar. Okay, and along with that, if I enable 50 days EMA, we can see that the stock is actually trading over 50 days EMA and it is starting to look strong. Okay, here it breached 50 EMA, but now it is starting to stay up and now it has gone up above that. And now if I enable the 200 days EMA, we can see one crossover here. Okay, and what is this crossover called? It's a golden crossover. 50 crossing above 200, it's a golden crossover, so it is always an indication that an uptrend is starting. Now here we have to use the momentum indicators as well. So when we look at MACD, we can see that the MACD level has always been above 0 for quite a while now, and now it is starting to give the appearance of a crossover. Maybe it might happen in 1 or 2 days. And same with RSI. If we focus on RSI, we can see that it has stayed above 50 level. Now it has gone above the moving average. So clearly there is strong momentum in daily. Okay, now we also have to check the same in weekly. Okay, if I go to the weekly, so I can see the same thing. The crossover actually happened here, so which is somewhere around here. Now there are green bars appearing in weekly, and in weekly the stock has also gone up above 50. Now it has gone up above 60 as well. So clearly there is momentum building in higher time frames as well as in lower time frames. So definitely you should keep this stock in your radar and keep tracking it, because this is one of the stocks which is actually a long term stock. You cannot expect to do swing trading in this stock, and you can, but it is not advisable because the returns won't be that rapid, like 7% 15% gain in one day. That won't happen with FMCG stocks. Even if it happens, it's rare. Okay, so you cannot rely on that. This is mainly a long term investment stock. So if you are interested, definitely you should keep watch. And what you should do next? Well, if the stock actually stays above this level, to this 2000 level, okay, 2000 level, okay, and maybe you can track it in 2 hours and continues to go up from here, okay, then this will be a very good point for entry. 2060 to 2000, okay, this will be a good point for entry. But reminding that please remember, this is not a stock recommendation. Okay, this is just an educational video to help you understand a better approach towards investing. Okay, and you should always make entries at the near perfect time, although it might not be perfect every time, but you should always strive to enter at the right time, at least when it is just giving a breakout and it is near the major moving average like 50 EMA or 200 EMA. Okay, not when it is far above 20-30% above 50 EMA. Okay, that is a bad time to enter. So that was all about Zydus Wellness, and let me know in the comment section below if you like the analysis. If it was helpful, please hit the like button, write some comments, share it with other people, and also don't forget to subscribe to Financial Impulse. And also, if you are a subscriber and finding my videos valuable, consider joining the Financial Impulse community, where you will get more stock analysis posts, and also you will be able to chat with me 1-to-1 directly on Discord. Thank you for watching. I'll meet you in the next one. Bye, take care.